Hello, everyone. Welcome to Stock Talk Thursday. It is April 28th. We're going to be looking at several things in the market here because it has been a crazy last week. So we're going to kind of dive into that, break that down, and see what's been going on and what's been hot and what has not been hot. And so I'd love for you guys to put in your comments and your questions. Love to have this be an interactive thing. We always get some good questions from you guys. We love answering, so I'd love to do that. All right, let me go ahead and share my screen with you real quick. There you go. You should be seeing the Charts by Tradeway screen right now. Guys, we are in a squirrel market. We have been for a little while. And but we do have a little bit better of an idea of direction right now. As you guys know, I was complaining a little bit last week, wasn't I? I was like, man, market, come on, dude, just figure out what you want to do. You want to go up, you want to go down, whatever it is, just, do something. Don't just be all wishy-washy here. Right? I mean, that's the worst kind of squirrel. Well, guess what, guys? We got a bit of an answer here. So this was Thursday, right? I was like, man, just do something. And then Friday, it did something. Then Monday, it broke support and did. What was that, Monday? Oh, okay, no. So this was Thursday. I'm sorry. But it was beginning of the day, and so we were kind of up in this area right here. So this Thursday, right after we got off, I mean, the rest of the day, it did something. Then Friday, it broke support, and it really did something. Look at that massive candlestick. I think the only candlestick that's about the same size there moving down is probably on this day right here. Then we had, an expected day of maybe just a little bit of pulling up, and you could look at it as some profit takers on some bearish traders, but didn't even make it above the 5, and the next day got slammed down again. Yesterday, a bit of some doji action right around support right here, and today we're moving up a little bit. Now, does that mean that we are going to continue heading up? We just don't know. There's nothing about today's candle that makes me think, okay, yeah, we're going to get bullish now, even though it is a little bit of a bounce off of support. So we are still in a squirrel market. What would it take for us to call a bear market? Well, I think we would have to break these lows. Break the support, break these lows right here, and make a lower low. And then essentially what you have in a zoomed out version, if you will, is your high, your lower high, and your lower low if we make one. And at that point, it's like, okay, we can now call a bear market. So that's what we're looking at right now. Still in squirrel market territory, but definitely seems to be more bearish than bullish. And overall, that seems to be more bearish than bullish. And I would not be surprised if in the next week or two, we end up calling a bear market again. So with all that being said, and with this really pretty sizable drop in the market in the last week, that's pretty good drop right there, similar to here and here. So there's only a couple of drops in the last 6 months that really are about the same depth, if you will, as this recent drop in the last week. So with all that, let's take a look at what was hot last week and what was not, and let's see if those things are still holding up. So let's jump right into SD. SD was our hot stock. Here we go. Sandridge Energy. Again, it was one of those energy stocks. Energy's just been killing it. And, well, look at that. SD, did it come down a little bit? Yeah. I mean, the whole market pulled everything down a little bit. But where did it bounce? I mean, it didn't even get below the 50. In fact, me just saying that it didn't even get below the 50 implies that it was above the 50, which means that overall it's been one of the hotter stocks out there. Let's look at the overall market again. Market's below the 50. In fact, we've got inverted EMAs. 10's below the 20, which is below the 50, which is below the 100 and 200. So, we look at SD and we've got the EMA stacked bullishly, 10 above the 20, above the 50, above the 100, above the 200. There you go. So SD is pretty hot. It did come down a little bit, like I mentioned, but then it bounced right back up again. Now, whenever I see a stock that likes to bounce between the 20 and the 50, kind of like it did here and back here as well, I like to go to one of my other settings that I have and look at some Fibonacci sequence EMAs. It's don't worry about all that if you don't know what all that is. It's just another way that some of the big boys look at things, and certain stocks they want to trade off of those EMAs. And so we have, instead of 10, 20, 50, we might look at something like 8, 21, 34. And in this case, it looks like the 34 EMA has been support for SD. So once it bounced off of that, last couple days has been moving up again. So even though the market, I mean, what happened yesterday in the market, right? Yesterday was just doji day. And the day before that was down quite a bit. But SD, after putting a little bounce, has just been moving up again. So nothing too crazy going on with SD. Well, we can even throw in potentially a line right here. Look at that. There you go. Holding the uptrend. That's actually a pretty decent line. I should have had that on there before. Didn't see that. There you go. So SD still holding to be quite hot. So that's good news for SD. All right, let's take a look at what was not hot in the last week. And that was Netflix. If you remember, Netflix had that massive drop on earnings. Their forecasted future was not that great, and that's why they dropped, even though their earnings was pretty good. And they just, ugly, ugly, ugly. Look at this. Actually, I had that in my notes, just like, wow, ugly, 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 because it's just down, 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 down. Oh, let me get the, forgot to change back to my regular setting here. There we go. I like to have the setting where I have the 5-day moving average as well. And I mean, it's just red candle after red candle, moving down, moving down, moving down. Today, finally, moving up a little bit. I mean, it have to at some point. Still nothing convincing though, as it's still below, not even at the 5 EMA, but still below the 5 EMA. So Netflix managing to break the $200 level to the downside, that is, even though it was up near $700 just a few months ago. So Netflix not looking any better. In fact, just looking worse. If you were in Netflix or have stock Netflix, you would have hoped that it could have bounced after a pretty big drop like that, but it has not. It's just been bearish all the way. So we'll have to see what happens in the future with that. All right, let's dive into this week. Let me make sure real quick that we're not missing any comments. I don't want to miss that for you guys. All right, we're looking good there. This week, what do we have? And I'm going to tell you guys, it was tough to find, a hot stock. How do you find a hot stock when you've got the market doing this, right? And I looked specifically at the last week. So you can already see it up here. It's KMB, Kimberly Clark Corporation, but I'm going to walk us through how I found that. So let's come up here to the home page, market page. We're going to look at the last week. And you can see every single sector. Every single sector is down. There's no hot sector in the last week. So what do you do with that? Well, I was like, well, let's take a look at the sector that is getting hurt the least, right? I mean, everything's down, but consumer defensive is the one that's getting hurt the least. So let's look at our heat map right here. Let's expand this guy and let's look at consumer defensive and see what we can see. Again, we have 1 week selected. Now, based off this heat map in the last week, is pretty obvious which one I'm going to choose. There's only one that's like, boom, bright green, like this one's doing well. Okay, so we're going to take a look at this guy, Kimberly Clark Corporation. So I want to show you guys how I found that and show you that this isn't really that hard. It's not like there was a whole lot of research that was put into this. It's just looking at a couple of charts, or a bar graph and the heat map, and here you go. Here's one that is doing fairly well, considering everything. So let's take a look at this guy. So big gap up on earnings. Earnings was it was good for them. They beat earnings out by a little bit. Nice gap up, and then it held that gap line. Guys, we have strategies actually built around that, by the way. Love to share more of that with you, but moving on here, like it gapped up. It did have kind of a down day there. You could look at that as just another opportunity to get in if you missed this initial move up. That's what that was. I mean, now that we have a couple more days to look at, it basically gave us another opportunity to enter if we had missed it the first time. So But the thing to catch here is that after it gapped up, it stayed up, and it's wanting to continue to move up. And remember what the market's been doing the last week. It's just been getting tanked. So this is pretty hot. This is pretty hot in the last week. Now there's something else I want to show you, because this thing gets even hotter. And as I dove into this more, I was like, wow, this one's actually pretty good. I like this thing. All right, so real quick, before we get to that, earnings. Like, why was earnings so good? I mean, yeah, they beat out earnings by 12 cents. All right, cool, 12 cents, whatever. But the real thing was it was up on higher sales and revenue numbers. So not only did they make more than they expected this last quarter, looking forward into the next quarter, things are looking pretty good on higher sales and revenue numbers. So you have a pretty big gap up that has held. All right, now let's dive into that other part that I want to show you. Let's look at a 3-year daily chart. So we're going to be looking at 3 years worth of daily candlesticks. There's a lot of information, and that's why it's not super clear on here right now, but that's okay. And if you have done one of our step 1 classes, you might recognize a pattern right off the bat here, kind of a rolling pattern, right? This thing's been in kind of a range for a while. Look at this right here. Okay, I'm going to drop a couple lines on here just so this is easier to see. A couple horizontal lines, so it's just, I don't have to click it multiple times. It's just literally dropping this thing here. We're going to drop one right around the $128 mark right there. And we're going to grab another one of these guys. I'm going to drop that right around the $143 mark, right about there. That'll work. Check this out, guys. This thing's just been rolling between these amounts. Did it come down and have an anomaly? Yes. Then it got back in the range. Did it have an anomaly on the opposite side, like oftentimes it does when it had an anomaly on one side? It can have an anomaly on the other side pretty soon afterwards. It did do that. Then it came back in the range. Up and down, up and down. Look at this consistency, guys. Up and down. An anomaly to the downs. Well, I misspoke. I don't know if it's an anomaly yet. Could it be a change in pattern? It absolutely could be. But with how consistent this is, I start to wonder, is this an anomaly to the downside on KMB? And does that mean that potentially in a few months or so, we may potentially have an anomaly to the upside? It's hard to predict, but it could happen. But look at where the stock gapped. This is the last week, just this little area right here. Let's go ahead. Now that we have this overall picture, let's zoom in a little bit here, okay? So here we go. So now we're towards the top side, towards that resistance again. So this is not an area that I would want to enter. I'm not saying that we are at a buy point for KMB. In fact, I would say it's the opposite. If you were in it right now, I'd say, hey, this might be a good sell point. But because of the consistency of this particular stock's pattern, this would be one that I would want to watch. Because what if in a few weeks or a month or so, it comes back down to the $128, $130 range and bounces up off of this very strong support line? That's pretty hot. You guys remember a few months ago, I gave you a bonus hot stock, and it was, I think it was Ulta, ULTA. And the whole purpose of that was to show you a nice rolling stock and what a rolling stock can do, because there's so many different strategies that you can trade a rolling stock with. And I listed off, I don't know, a dozen or so. And there is even more than that. This is a very similar situation where we look at this last 3 years, and this has been rolling quite a bit. So it's hot because in the last week, it's pretty much jumped up from right at support to right up at resistance. That's pretty hot, but it's also hot because of the consistency of the pattern. In fact, I would say the primary reason it's hot is because of the consistency of the pattern. Because if something is consistent, and predictable, repeatable, reliable, then it's tradable. And then there's the opportunity of making some money there. So there you go. That's KMB. That is our hot stock. I didn't want to miss that point of the strong support and resistance lines that we're looking at. And so I'm glad we got to cover that. All right, let me check. We're still good on comments. All right, let's look at what is our not hot stock. And again, this one was kind of difficult because, what's not hot in the market? Well, the whole market. Okay, look at that. From 4,500 down to 4,150 nearly. I mean, that's a 350 point drop in just a few days. That's pretty big deal. I mean, we've had multiple 100-point drops in a day. That is significant. So here we go. So how do you find a stock that's not hot? Well, honestly, let's use the same method. Let's come back here, come back to our market page. Let's dive in. Looking at the last week, what is the worst looking one? I mean, again, they're all bearish. We just looked at consumer defensive, which is the one that's not as bad, but which one is the worst? Okay. And the one that I had, remember, I kind of do my homework on this the day before, and it was basic materials, which is still one of the worst. It looks like a couple of them have taken over, but we're going to dive into basic materials because that's where I found one that I want to talk about here. So basic materials, we're going to come down here to the heat map. Basic materials can be a tough one to find on the heat map, okay? It's at the very bottom right. I'm going to click this guy. And again, we're looking at the last week. And as you can see, there's nothing in the green. It's all red, or the black is neutral. So the hottest one within this sector is going to be international flavors and fragrances. But we don't want the hottest because we're looking at what's not hot. So you can use your mouse to go over every single one of these, or pick out the ones that look the worst and look at each percentage. But what I went ahead and did was you can also just filter right in here. So I'm going to filter out some of the better ones, so I'm left with what's worse. And there might have been some changes since yesterday as well. Okay. Change of plans. We're going to go back to the chart. I'm just going to give it to you because here's what I came up with was ISRG. ISRG is our not hot stock of the day, of the week. And you can see that there's been a pretty big drop here. So we were over $300 and now we're down to $240, and that's after it's been moving up today. So earnings actually, again, decent, beat out earnings by 7 cents. Nothing crazy, but why did we drop nearly 14% on earnings day and are down 22% over the week? What's going on with that? Remember, guys, there's two parts to earnings. There's what has happened in the last quarter, and then there's what we're forecasting in the quarter. Those are two. I shouldn't say there's only two parts to earnings, but those are two of the main things that we're looking at. And I'm sure there's much more to earnings, but for the future, that's what got ISRG, Intuitive Surgical. And so what we're looking at now is a company who the earnings or the forecast wasn't that good, and so the price just dropped and it kind of tanked. And look at this, got down below the 5 EMA and it stayed there. In fact, it's below the 5 EMA even after moving up today a little bit. So it was kind of rolling a little bit. Pretty good drop right there, and that's why we've got ISRG as our not hot stock. Support, we look at this right here. Let's drop a line. We had this support line right about there. So you can see it off that wick right there. So moved down, did not hold, kept moving down. And there we are. We've got inverted EMAs now, 10's below the 20, which is below the 50, which is below the 100, below the 200. And ISRG really not looking very good. So there you have it. We've got our hot stock of KMB and our not hot stock of ISRG. Make sure that we're not missing any questions or comments. Looking good right now. All right, guys. Let me stop the screen share. There we go. A couple things I want to let you know about. We are hosting a workshop 2 this weekend. That'll be tomorrow and Saturday, taught by Ben Russell and Jared Russell. And so if you're part of our workshop programs, go ahead and be sure to take a look at that. There's some really good information there. You're going to get more strategies, more wisdom within trading, and just more learning overall. So this is some pretty advanced stuff. So if you are part of the workshop series, go ahead and be a part of that. You can register going to tradeway.com. Right in the center, you're going to see a button that says online virtual events. Click that, and you should see one of the options being the workshop 2 event. And guys, if you are not part of the workshop series, we recommend take a look at that. Email support@tradeway.com, get some information. Or if you're not a part of the Tradeway family at all, we'd love to invite you to a Step 1 Start Your Journey. That'll be May 13th and 14th. So just in a couple weekends here. And that's going to be a fantastic place to learn about the stock market, learn about what we're all about, and see how we can help you. And again, that'll be online virtual events at tradeway.com. Just click that. You'll be able to see a sign-up registration for that Step 1. That's going to wrap it up for Stock Talk Thursday today. We'll see you guys next week, and we hope that the market will behave a little more. We'll see you guys later.